The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Well, a return to the skies for Virgin Australia coming back to the ASX, relisting in the last few minutes or so. We've actually got some footage live from the ASX. It's going to be under the ticker code VGN. You'll remember last time it was under VAH. Now this is after a $685 million IPO. Shares were offered at $2.90 each, valuing the airline at $2.32 billion. Now Virgin was delisted during COVID in 2020 after Bain Capital rescued it from going into administration. Bain will now see its stake reduced to 39.4% from about 70%, while Qatar Airways, which brought into Virgin, will retain 23%. Now, Lachlan Holloway, of course, a friend of ausbiz, equity strategist at Morningstar, he says the $2.90 offer price is too high. The broker has a $1.90 fair value estimate. Morningstar says the offer price reflects market conditions that are unusually favourable and unlikely to last. Let's get our guests' views. Michael, I think you said that Medallion had a small stake in this.
No, we couldn't really get much. It was one of those IPOs that sort of gets presented to a lot of people, but the reality is it's very tightly held at the moment, and the allocations on offer were fairly minuscule. It's one of those companies that we think has been priced not too badly for the IPO, and that people who did get the IPO will probably get a little bit of a pop out of it. But from a longer term standpoint, is this a business I want to be holding in 6-12 months? Probably not. Obviously there was the first iteration of Virgin, which didn't end too favourably for investors. Bain has gone in, done a decent job of turning the business around. You've obviously seen an improvement in travel conditions post-COVID. You've seen the oil price until very recently been under significant pressure, and they're pretty favourable conditions for an airline. What makes this IPO, I think, attractive in the short term is the fact that Bain can't sell out any more of their stake unless a share price threshold is met within 6 months. So there is some incentive to see the share price do well in the short term, but longer term, airlines tend to be very challenging businesses. So many variables, intense competition globally, often from subsidised competitors, and history is littered with the corpses of many different airlines that have gone belly up. So it is a very difficult industry. Loyalty is one thing that they try and emphasise, but the reality is these days, the seat in the economy is very similar regardless of what plane you go. So people are tending to fly more on price and convenience in terms of time of day, rather than having some wedded alignment to any particular airline. So, especially
when you get your value points downgraded all the time too, right? The loyalty points. So is that sort of an avoid? Is that what you'd be saying?
On a long-term basis, yes.
Yeah. All right, Mark.
Airlines generally are a terrible investment. Virgin particularly, after what happened to the poor shareholders, before I went into administration, they got virtually wiped out, didn't they? So it's been resurrected. It's a real phoenix. I think Bain are going to get a fabulous return on what they're going to make out of this, but that, they put their money up to do that. So there's going to be a lot of happy faces, well, there would have been at the IPO. But as an investment, the two reports you had, one valuing it at $1.90, and the other one saying that it's trying to capitalise on very positive market sentiment, I think is absolutely true. If you did buy it if you did get an allocation and it pops on the...
So I should just point out it's up 9% at $3.15 or $3.16. Yeah.
Well, if I had any, which I wouldn't because I wouldn't have bought them, I would sell it into the pot, because and even the I'm not sure how much the share price has to go up before Bain can sell more shares, but that's the other side of that. That's quite a big hangover too. So there's probably whatever that is. Do you know what it is?
Not exactly.
Okay. That'll probably put a bit of a cap on it, I would think. Anyway, going forward. But as a business, the airlines generally have been net negative. So if you look at all airlines around the world, there's never been more money that's come out of them that's gone in. So they're a net loser. There's not many industries like that, and airlines are one of them. And as Buffett said, when Kitty Hawk flew the first time with the Wright brothers, they would have done future investors a favour if they shot it down.
Yeah, I don't know if I should be laughing at that. All right, avoid, or if you had a sell there from Mark, so that does it for our stock of the day, which is actually up 9% on its debut, $3.16. Encouragingly, or worth pointing out, I should say, Qantas also doing well, up by 4% today, and that's despite, of course, all the concerns of the airspace being shut in the Middle East. So Mark Moreland saying airlines are a terrible investment. This is a great return though for Bain, but a bit like a phoenix rising. If he had it, he'd sell. And Michael Wayne saying avoid airlines are longer term challenging businesses. That does it for the stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.